My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, try and make some money. My job is not just to entertain you, but to educate and teach you, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. Wall Street spent weeks worrying about the possibility of a Russian invasion of Ukraine. And through that whole period, stocks drifted lower. Sell. Then the moment the war gets rolling, our stock market screams higher. First rebounding like crazy off yesterday's lows and then roaring again today. Dow surges 835 points. S&P pole vaults 2.24%. NASDAQ jumped 1.64%. I mean, how the heck do we explain this action? Is Wall Street maybe heartless? Are we a bunch of sociopaths who enjoy the spectacle? No, that's actually not the way this business works. What Wall Street wants is for the war to be over, regardless of who wins, because the stock market craves one thing, and that's certainty. It loves certainty. And unfortunately, this is a very one-sided war where the conclusion is not in doubt because Putin has overwhelming force. Once the bullets start flying, the situation became more, not less certain. Throw in an overwhelmingly oversold market, and you had all the ingredients for a spectacular rally, something that was predicted early on Wednesday when we highlighted the work of the legendary Larry Williams, who made yet another tremendous contrarian call for us here. Of course, we remain in a what have you done for me lately market, right? And having bulked up on stocks for my charitable trust, we actually took some profits today to get ready for a possible downturn next week when inflation gets, not Ukraine, becomes front and center. Remember, Jay Powell, the Fed chief, is making 2 appearances on Capitol Hill, and we've got the February employment number on Friday. Those are 3 things that will have us laser focused on inflation. The other big worry that shows up, just not letting up one bit. This market has a hard time processing 2 themes at once. So next week, the focus will shift from Ukraine to inflation. Fortunately, even after today's run, the averages remain somewhat oversold. But unfortunately, inflation is sky high right now. As much as Jay Powell wants to go easy on the economy, he doesn't want to be the Fed chief who allowed inflation to permanently embed itself in the system for the first time in 40-odd years. What else is on tap next week? Beyond the big picture macro stuff, we got a slate full of earnings starting on Monday with a host of major tech companies, Workday, HP, Zoom Video. In some ways, this trio is actually a microcosm of the broader technology industry right now. Computer companies like HP have seen hideous supply chain issues. Look at Dell, down nearly 8% today because they couldn't get enough components, not because they didn't have much demand. Workday's got a problem of its own. The stock's expensive on an earnings basis, and you have to be concerned in the wake of earnings that it can duplicate the stock of Zscaler, which got crushed on a great, not super great quarter today. Hey, you'll see what I mean when we speak to the company's CEO later in the show. As for Zoom, you got to be concerned about their business and whether it holds up as the pandemic recedes. Tuesday morning, we hear from Target. After a sickening slide from $266 to $190, this stock finally put on a decent showing today, rallying about more than $7. Which is the true target? Will they say business is terrific? Or they tell us it's hard to get goods and hard to raise prices? This week, Lowe's did the former and Home Depot did the latter. So Lowe's roared while Home Depot broke down. I think it's become too much of a dice roll to predict which way these retailers are going to go at this point. That said, I'd rather bet on Target than Kohl's, which reports the same morning. This embattled ho-hum department store is besieged by multiple potential acquirers. It would go up huge if they would take the bait. Also on Tuesday, Domino's reports. And like so many other restaurant plays, the stock has been hammered lately simply because business has been consistent rather than spectacular. If Domino's doesn't blow away the numbers this time, I think investors will decide that it was merely a COVID winner, not a post-COVID winner, even though it has many years of going higher. I disagree. I don't make the rules, though. After the close, we hear from Salesforce.com, which has been pulverized by the sell-off in the high-flying cloud stocks. Don't I know it? The Travel Trust owns it, even though it's got real earnings and bountiful cash flow. The relentless, ruthless selling pressure ended yesterday, though I think the dumping is overdone. I bet it makes the numbers, but full disclosure, I will be talking about it for the CBC Investing Club, and I am biased in favor of it because we bought the stock at $8 initially. That's when we first had the show on, had Mark Benioff on. Now, Wednesday's real interesting because the stock that was doing very well, Dollar Tree, It's been under pressure from activist investors for ages. They don't like the execution, even as the stock's had a nice run lately. I think Dollar Tree's a winner, especially now that the government's COVID subsidies are gone. Look, a lot of families have to trade down now that they don't get that tax credit for children. Then Jay Powell speaks, and this is my worry when you start thinking about what's going to happen here. He speaks before the House of Representatives. Will he tell us anything about the cadence and size of the rate hikes? Will he use the occasion or his remarks to the Senate the next day to announce the end of the Fed's bond buying program, which is ridiculous as it is? Or will he just rope-a-dope, choosing to make policy announcements on his own turf? I'm betting it's the latter. Two of the most richly valued stocks in this entire market, Okta and Snowflake, reported after the close. Wednesday, you know what? This is going to be a very tough day. I'll tell you why. Because, well, I'm not sure about Okta's quarter. See, there's been a lot of turnover there of late. Now, I've got to find out what that's about. Snowflake, though, continues to be the high multiple stock of choice for many because of its terrific consumption-based business model. The brilliant CEO, Frank Slootman, has made more money for investors than almost anyone else of this era, yet few have ever heard of him. No, he's not Elon Musk, but he's the newfound king of the cloud. The inflation buck is supposed to stop at the supermarket, right? So let's hear what a largest supermarket has to say when Kroger reports Thursday. After a miserable period of underperformance, Kroger's been delivering consistent numbers despite the pandemic. Still, I'm concerned that the desire to keep customers happy may cause them to eat some of the cost increases that the suppliers are pushing on them. That's going to hurt margins, send the stock lower. Also on Thursday, we hear from Best Buy, which disappointed last time because of margin pressures. I think they might be able to turn it around this quarter. It's a really well-run company. The prevailing wisdom is that people won't be buying big screen TVs as they go out again post-COVID. And, you know, it can bounce because, like, remember, I mean, the stock's down so low, but there are probably better stocks out there. Better stocks like Costco, which reports after the close Thursday. I love Costco. I love to shop there. I love when we visit its headquarters. And I love it for my Travel Trust, which I've told members of the CNBC Investing Club is one of my absolute favorites. Will there be a rise in the membership fees? Will there be a special dividend? If we don't get one or both, and I think my love could momentarily go unrequited, what an opportunity no matter. If that one goes down, buy. Finally, there's Friday's employment number. If it's red hot, then Jay Powell will look too dovish if he didn't take a hard line earlier in the week when he had the chance at this meeting and this meeting. It's worth noting that I am convening a CNBC Investing Club meeting at 12:30 p.m. Friday, where I will be introducing the most powerful man in the oil patch, Rick Muncrief. He's the CEO of one of our hugest winners for the trust, Devon Energy. Do you know that Devon was the #1 performer in the S&P 500 all last year? And do you know it's threatening to repeat those gains this year? Why? How? Because of Muncrief. What does he think about the world's oil and gas situation, about Russia, about the Permian? Let's find out together. Join the club. Here's the bottom line. Next week, the market's focus will shift from Ukraine to inflation. So I say, get ready to give up some of the gains. Dante in Florida. Dante.
Hey, Jim, how you doing? I'm from South Florida. Great to hear you.
You are so lucky. My wife's down there in Delray. Say hi. What's going on?
So today my question is about Shopify, Jim. I know with the current environment, everything in the book is saying not to buy this stock, but it's down about $1,000 from its all-time high. So I wonder if I should take some pain right now for hopefully some gains in the future.
I thought about that all day today when I saw what Etsy did. And Etsy's a great company. Shopify did not do as well as Etsy. I have to tell you, I'd actually rather buy Amazon right here. I'm not kidding. It's down a lot from the high. Let's go to Cindy from Oklahoma.
Jim.
Cindy.
I'm a 71-year-old retired educator, and I consider you a fella educator in the course of Wall Street. Thank you, thank you.
Wow,
Here's
thank
my
you.
question.
Yes.
You recommended American Eagle Outfitters, AEO, in recent months, and I would like your current thoughts on the stock.
Okay, first, Cindy, thank you for those kind words. Second, Matthew Boss, the J.P. Morgan great retail analyst, is the one who introduced me to the concept. Third, this one yields almost 4%. It does report next week, and it's sickening to me that it's going down so much. Retail's been a hard place to be. I think the dividend's safe. So at this point, Cindy, I think you got some real yield support down here, almost yielding 4%. But it has been a pathetic parody of a human. The man should come on. They should come on Mad Money when they report. Period. End of story. Ted in South Carolina. Ted.
Hi, Jim. Great to be on the line with you. How are you?
I am good. How about you, Ted?
Fine, thanks. I have a question about car companies.
Yes?
We see the traditional automakers launching electric vehicles to the market, They're answering the Tesla bell. I
Yes,
guess.
they are.
It's kind of like we got to do it too. But what about our new-to-industry players that are electric vehicle only? How will Rivian, Polestar, and my stock Lucid do in the short and long term?
Okay, so first, I think Rivian's going to sell at everything that it can make to Amazon, but Ford's got a big stake. I'm not really quite sure about the second one. And the third one, Lucid, does report next week. I know that they're light on deliveries, but I also know that the stock is light on points. It's been crushed. All right, this week, the market was focused on Russia, Ukraine, right? But I want you to steal us up for a major shift. Next week will be all about inflation, and I don't think it will be greeted as well as the terrible thing that the Russians did. On Mad Money tonight, Zscaler fell today after putting a top and bottom line beat for the second quarter. So what's Wall Street slam? What are they worried about, Wall Street? I'm going to dig in with the CEO. Then, in times of volatility, is it time to turn gold? I thought we were supposed to turn to crypto. I'm surveying the space with Barrick Gold's top brass. And Suntory, the maker of Jim Beam, Maker's Mark, Basil Hayden, is seeing real strength in the spirits business. Why don't we go off the tape with the company's CEO to see if this could be a trend that we must be watching? So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.